This is the Amplify Seymour Cannabis ETF, symbol CNBS, update for the third quarter. I'm speaking with portfolio manager Tim Seymour. There's a lot of news out of Washington over the past quarter. What do investors need to know?
There's been a lot of news out of Washington over the last 5 quarters, so I think investors need to be cautious about overreacting. And I just want to make it clear, when we're investing at CNBS in the cannabis space, we're not investing for the next headline out of DC. We're investing for the long term, and we're investing to be part of at least the federalization process and really what it means. But for us, finding good companies now that are executing in an environment where cannabis does have headwinds out of Washington. But to be clear, 2 weeks ago, when Biden came forth and said that cannabis needs to have access to banking, but that they were going to reassess criminal justice issues, they were going to pardon folks within the district. He was leaning on governors to do the same in states. But maybe most importantly, that the rescheduling of cannabis from a Schedule I drug, which means effectively it's on the same par with heroin or LSD, and that is the element of what was announced that is critical, because that would then trigger a number of different events for investors that would be multiple enhancing, including changing the tax structure from the federal government on the industry, allowing access to more traditional banking, lowering the cost of capital, et cetera. So exciting news. We've been there before, and investors need to be investing for the long haul. But to be clear, this was exciting news.
So, Tim, investors who are new to CNBS, could you give them an overview of the investment thesis?
Sure. CNBS is a cannabis ETF that is invested in cannabis. And what I mean by that is, by definition, we have to have more than 80% of the portfolio consist of companies that generate more than 50% of their revenues from the cannabis sector. So it's not about buying pharma companies that might be here, or tobacco companies or spirits companies that might be here. It's about owning the companies that right now today are in the middle of the sector. But our positioning is clearly also intended to find those companies that we think are the ones that are going to be winners tomorrow. Investing across multiple sectors, because the cannabis sector is, as we often discuss, a traditional CPG, consumer packaged goods sector, that at some point we expect to be as sophisticated as the spirits industry or the consumer staples industries. But right now, it's about finding those companies that are well positioned. But we are investing across multiple subsectors. We're also investing globally. So while the U.S. is the largest cannabis market in the world, and our exposures at the top of the balance sheet reflect that the U.S. is a disproportionate part of where we get our exposures, because this is the biggest, most exciting industry now, we are looking globally. And this is a global sector. We're an active ETF, which means we're not waiting for a quarterly rebalance. It means we can act in real time around trends that we see that are happening every day.
So then what do investors need to know in terms of the actual portfolio construction and the investment strategy for the ETF?
We endeavor to find the companies that we think both have the balance sheets and the operational teams to get through difficult periods in global markets where the cost of capital is rising. And for an industry like cannabis, rates have gone even higher than they already were in a difficult time. We're trying to find the companies who have the best assets in the best places. And in many cases, at least in the U.S., that means finding the companies that we think are exposed to the different states that have the most attractive cannabis markets. But again, more than 60% of our exposure right now, the top of the balance sheet, is in the U.S. vertically integrated operators space. But we also own those companies that we think have exposure to software, to e-commerce trends. One of the larger positions in our second tier of companies within the portfolio, and I mean the next rung down in terms of portfolio concentrations, is an e-commerce company. But we will limit the maximum size of the position to 20%. Right now, the largest position is actually closer to 10, and I think that's more representative. But a core of U.S. multi-state operators are the dominant part of the top of our balance sheet, in one that is globally, and again, has to be invested in companies that are generating more than 50% of their revenues in cannabis right now.
So, Tim, as you look at the ETF today, are there any holdings that are of particular note to investors that you could speak to?
Well, I would just highlight the largest position in the fund, which is a company called Curaleaf, which is also the largest cannabis company in the world by market cap, by sales. This is a company that will probably do $1.2 billion to $1.4 billion in 2022 in top line sales, and we expect to grow from there. What's exciting to me about Curaleaf, not only is the it has been defensive in a very difficult year for the multiples and the valuations of cannabis companies, but this is a company that has outperformed because I think the balance sheet is the strongest. But what excites me about the next 3 to 6 to 9 to 12 months for Curaleaf is I think they are going to see higher margins. I think if I look at their CapEx profile over the last couple of years, we're seeing a lot of that CapEx fall off as a couple key projects and things that are now coming online will actually be cash flow generative. This is how we want to be investing in the space. We want to find companies that are going through these transformational moments and buy them on that uptick in their margin.
So Tim, to wrap up, as you look at the fourth quarter, what do investors need to pay attention to in the cannabis space?
They do need to pay attention to the macro around where DC will allow banks to come into the sector, will allow listings, will allow the taxation for the sector to change. Ultimately, we think that there could be some headlines, but we're not trying to invest around that. In fact, we've been quite consistent, conservative around that. The headlines that for the companies that are the most important is where we're actually going to see stabilization in margins and in pricing. And as we get into the third quarter earnings, which will in the cannabis space be out in the next 3 weeks or 4 weeks or so, it's about seeing where these companies are going to begin sequential growth. Again, this is a high growth sector. It's an exciting time for investors to be investing, not only because you're investing at multiples that are significantly lower than they were 6 months ago, even 12 months ago, but because there is this wall of institutional capital that is yet really to participate in this asset class because of some of the headwinds in DC. Meanwhile, the companies are operating and executing now through difficult environment. We think this sets them up to be very profitable in the future.
Tim, we appreciate your time providing an update on CNBS. Investors, to learn more about the Amplify Seymour Cannabis ETF, please visit cnbsetf.com. That's cnbsetf.com.